For millions of people, their tax refund this year is going to be less than what they expected. Are you one of them? I'll share the 3 reasons why, that and more, coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, hate to be the bearer of bad news, but millions of Americans are going to be receiving a smaller tax refund than what they have historically received, what they expected to receive. It's likely going to be smaller if you haven't been doing some proactive planning. Even if you had been doing that proactive planning, then it still may be smaller, but at least you wouldn't be surprised, okay? So there's 3 reasons why you might receive a smaller than expected tax refund this year and what you can do about it. Let's get into it. The very first reason why your refund might be smaller this year is the advanced child tax credit. That's right. If you've got kiddos, okay, that are not in childcare, okay? So they're in school and you're not doing after school club, whatever. And the reason why I say not doing that is because if they are, then you get an extra credit this year, so that could offset. But if you've got kids, if you've got young kids, the child tax credit, they've changed the entire system just for 2021 because they couldn't get it approved for 2022. And they started paying out some of that child tax credit in advance, okay? So in the past, so 2020 and earlier, your child tax credit was just a tax credit that you received on your tax return. In 2020, it was $2,000. If you had a child that was younger than age 17 that year, then you got a tax credit. It boosted your refund. It went on top of your tax withholdings and allowed many families, especially if you had a few kids, I've got 3, to all of a sudden, instead of breaking even on your taxes, get a several $1,000 tax refund. Well, in 2021, they made a couple changes to the child tax credit. Number 1, they increased it. So it went from $2,000 to $3,000. And if you've got a kid younger than age 6, it went from $2,000 to $3,600. Fantastic. Well then, why would my refund be less? Because in July, they started paying it out to you in advance. Meaning, if they didn't gunk up the system, which they did for plenty of people, I've told you before, I got the wrong amount. They miscalculated the kids, miscalculated my income, and I got the wrong amount for advanced child tax credits. By the way, I also tried to opt out of the system, and for some reason, I still got it. It's been a mess, okay? They started paying out half of the child tax credit in advance. Therefore, if in the past you got a $2,000 tax credit on your tax return, boosting your return, but this year, the child tax credit for your kids was $3,000, but they paid out half of it in advance. That means you received $1,500 from July through December, and your tax credit that you're going to receive on your tax return is only going to be $1,500 remaining. Does that make sense? So if you've got 3 kids, 2 kids, whatever, that can be a $1,000 reduction, a $1,500 reduction, or a lower child tax credit and refund than what you've expected in the past, at what you've seen in the past. So that's the first reason why your tax refund might be lower, and I think that's going to surprise lots of people. Folks like me and others have been trying to forewarn people about this, but I still think there's going to be lots of surprise because of that. The second reason why your refund might be lower than expected is the new tax withholding system, the new payroll tax withholding system through your employer that was rolled out. It was introduced a couple of years ago, started to be rolled out in 2020, but really sort of all kind of unanimously rolled out in 2021. From what I've seen, most employers have shifted to this new plan. It's required, by the way. If you still had withholdings done under the old system, maybe that's how it was being calculated. But if you changed jobs, if you updated your withholdings, you're going to be shifting to that new withholding calculator, that new withholding system. And guys, it's more thorough and it's more complicated, but it's more accurate from what we've seen. And we do around 4,000 tax returns a year. However, we do tax planning. So we're doing tax analysis, tax projections, sort of forecasting people's tax return. We did that all fall. We did, a couple thousands of those. And these withholdings are more accurate. It's more cumbersome. So if you want to change your withholding, it's not as easy as just tinkering with some exemptions. It's now more cumbersome. You've got to fill out more, potentially, an actual worksheet to an estimator to get the withholdings right. But when you do, it's more accurate. Which means if it's more accurate, they're withholding a much more accurate number each paycheck, and therefore you're not going to get this big refund. If you previously had gotten a couple thousand refund under this new withholding system, it might be closer to break even, maybe $100, maybe $150, something like that. So check your withholdings. That certainly could create a surprise and a much lower tax refund than you've expected. And then the final reason why I think a lot of people are going to receive a lot lower refund than what they expected, just did an interview at a local news station here asking about this as well, and that is you had more income at higher tax brackets, okay? The angle of the interview was, what are the tax ramifications of all these people that held crypto or traded crypto last year? Yeah, it's taxable. That's a capital asset. Okay, I know there were rumors and there was hopes that it wouldn't be, but it is. And so if you bought it here and you were lucky enough to sell it here before all the volatility this year, then if you did that in 2021, that amount you've got to report as gain. Therefore, you've got more income on your tax return. Okay, a second angle at this same sort of surprise reason why your refund could be smaller is lots of people got raises. Lots of people received an unexpected bonus. Some people received a couple bonuses last year because obviously we had labor shortages, we had supply chain issues, and there's now this demand, this higher demand for employees, for workers. And so your income may have gone up. Well, because our tax system is a progressive tax system, meaning, after all of your deductions, the first chunk gets taxed at 10%, the next chunk at 12%, the next chunk at 22%, and then 24%, and so on. The more income that you have, that means the more income you have that's being taxed at those higher tax brackets, right? So if based on your income, you were falling just slightly into the 22% tax bracket, you had very little of your income taxed at 22%, so your overall withholdings, you withheld plenty because very little was taxed at 22%. It resulted in a big refund for you. But if you make more income, now you have more income being taxed on the 22% level, and therefore your withholdings, if your average withholding is say 16%, now more of your income being taxed at 22% is going to start reducing that refund because your average or your effective rate or whatever, your withholdings are still at that 16% average, even though you've got more income taxed at 22%. Does that make sense? It can be confusing, but occasionally we're sitting down delivering taxes with folks who all of a sudden received more income or received a bonus, something like that. And even though their withholding rate didn't change, their refund actually went down because they've got more income taxed at that higher bracket. So for that reason, or if you were trading on Robinhood or doing cryptos and all of a sudden you've got more income, that's going to eat into your tax refund, and it could likely will create a smaller tax refund than what you've expected or experienced in the past. So what do you do about that? Well, a couple of things. Number one, we're huge advocates for proactive tax planning. Tax preparation is a reaction process. It's a let's look at what happened in the past and just get the right number in the right box and make sure we did our taxes correctly. Proactive tax planning, though, that's not tax preparation. It's proactive. What is it? It's designed to avoid surprises, which is what I'm talking about right now, and identify and capture opportunities to improve your tax situation. So proactively doing some tax planning would help you take a look and say, well, is your income higher? What are your income sources? Is that higher or different than what it was before? Have your withholdings changed? Are they the same? And if so, does that mean you've got, your refund's going to be smaller because you've got you're more top heavy, you have more income at these higher brackets? And have your tax credits changed? I.e., did you get some of your tax credits in advance, therefore you'll have less on your tax return? Proactive tax planning, doing a tax projection in the fall would have addressed all of that, no tax surprise. So that's number one. The second thing that I would tell you to do is capture opportunities. It's not too late. It's not too late to take a look at last year's return and do some things to improve it. IRA contribution, HSA contribution, something like that. Maybe you're eligible for retirement savers credit, my favorite tax credit. So work with your certified financial planner. Your CPA is just really designed, they're in your life to make sure you have an accurate tax return. Their job is not to identify opportunities. If you're using an online tax software, that is not going to help you identify tax opportunities. And guys, of all years, with all the changes that we've seen with child tax credits and the child independent care credit and even the stimulus that many people will receive when they file their tax return, now is the time that you need professional advice and actual advice, right? Taking a look and saying, well, what could you have done differently? What could you still do? So work with your CFP on that. That is their job, to identify those opportunities and avoid surprises. If you don't have a CFP on your team that can help you with that, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.